Good morning, traders, and welcome to Phoenix Blues trading update. Today is Thursday, the 27th of October. Hope you're all very well today. And my name is Nishal Patel. I'm going to be taking you through a quick snapshot of the markets for this morning, just seeing what potentially is out there to trade and what's happening right now. All right, guys, first moving on, I think the first thing we're going to have a look at is what key data is coming out today. We have some massive data on cable, or sterling effectively, I should say. And GDP figures Q on Q are being released. Let's not forget the data that came around last time. Had some quite buoyant data off the last figures running from June, running up till June, and these figures will be running from June till September, giving us a backdrop. What we should be expecting is probably a decline off the last quarter. Last quarter around we were 0.7% in terms of growth. Let's not forget these are preliminary. This is preliminary data, so we still have other data coming up, but this is where we're going to have the most amount of reaction off the marketplace. Probably expecting a lower growth forecast, which is expected, and that's what the Bank of England is saying. They're already telling us that we should be expecting a lot lower. The forecast for this quarter round from June till September, as I've already mentioned, is at 0.3% right now. That's the forecast. Probably expecting in and the region of that. Anything over that, let's not forget, then we should see help in terms of some relief or recovery in terms of the sterling. We'll have a look at that chart in a moment because it is still looks very bearish, which is not which is I'm sure that many of you won't find unexpected. We do have key data out on the USD also, core durable goods, as you can see, and the fortnightly unemployment claims data is also coming out. Now, I'm talking about that. There is a lot happening in terms of the US. We have presidential elections, and we're in the run-up to the presidential elections, where the elections are due on the 8th of the coming month. So very soon, and that was pretty much straight off the back of the non-farm data. So a lot is happening in terms of the USD and its strength, and also debates on how it can be pushing. And in fact, what I'm going to do now is I'm just going to push straight onto that chart because I think that's the best place for us to go to. So why don't we go straight to the data on our chart? Well, the first thing we're going to have a look at is the dollar index. Right now we can see the dollar retreating off that 98 level that it has hit recently this week already, struggling, as we can see on this daily time frame. Remember this, looking at this future index of the dollar, we can see it's literally coming off that 98 area. I've drawn these levels of larger time frames. It's not, and I'm just going to condense some of this data just so you can see effectively where I'm deriving these levels off. Right now, it's sat just above that 98.50 level, or and literally sitting on top. It has been propped up there for a matter of days, and had a bit of a break down and then coming straight back off. There has been some good buoyant data coming out of the US recently, and particularly in the housing market, but the data that we've got coming out today should give us a little more in terms of what they're going to be expected. Remember, let's not forget that they've got data coming out in terms of their GDP figures very shortly as well, and that should have a knock-on effect onto obviously onto US dollar, that compounded with our non-farm data coming out very shortly, imminently, in fact, over the next week or two. And the presidential elections should make a good show of where this potentially may go to. Right now, probably expecting some degree of consolidation on this, like it has been doing over the last few days. Really is running out of steam. Maybe see a slight reprise on this, but based on the figures today, we might see some movement on this, some short-term movement. going on to that, how does that look on our charts? Well, I think the big one, and I think one that many are going to be looking at, is the yen. And with the yen right now just floating in and around the 104.50 level, which again is a key level. In fact, I'm just going to move this over to a weekly time frame here, and what many of you will find is the 104.50 to the 105.50, or that effective range that we've got is key. And what we're seeing is a lot of traders, and most traders using the intermediate of the 105 to take it short, and looking to take the yen short off that, and have most certainly been doing so for a period of months. If we go back to this daily time frame, we should be able to see how long the yen has been stuck in that 100 to I'm just moving this over now to from that 100 area to that 105 region, and we see we've been stuck for a matter of coming up to 4 months now, where it's pretty much been range bound, a very large range that it is, and no doubt many people have been trading that range. We certainly have. But right now, any kind of buoyant data coming out from the US quite far, it should be quite interesting to see what happens to the yen over the coming days, and see how quickly it breaks that 104, 105 level, or if we're going to have a slight reprieve on the US dollar, and for it to start coming back into line with, in check with this range, and break down from that 104.50, 105 level. Max short retreating back to the 100. Let's not forget how the BOJ have reacted previously in the past, and some of the data that's come out. I should say data. I should say news, factual news coming out from what the BOJ, I should stand corrected. BOJ have said over the last week, in particularly their policy decisions, and how their policy decisions have not effectively changed. So that is also a huge talking point for us. Going over to cable and looking at the data on cable here on this daily time frame, we can see that price action is slowly retreating. We're seeing some weakness in the sterling today. And that's after a small bout, bouts of movement. Effectively, haven't seen too much movement on cable recently, in comparison to earlier on at the start of the month, where we saw some huge extravagant moves that no doubt many of you have benefited from. Price action moving down to that 12200 level, just sitting just above that right now. Probably looking off the data primarily today, and probably see that movement coming up very shortly. Let's not forget that data is out this very morning, so it'll be interesting to see what happens. Obviously, we are still under the big cloud of Brexit, so that is obviously going to still have a couple of hands to play in how the sterling pans out over the coming, I would say, months. It's, we've got a long time for people to perceive how we're doing here in the UK. So this chart is certainly one to watch, and I know it's at the forefront of many traders' minds. Moving on forward, going straight to the Australian dollar right now. The Australian dollar has come off this 7,700 level effectively. Just looking at this on the daily time frame, I'm not going to scale down or scale up too much. I'm just showing you guys what it's doing and breaking down. This is off yesterday's huge high test bar, coming up and breaking that 7,700 level, literally coming straight back off it. And as we can see from the Asian session leading into this morning's European session, we can see that the Australian dollar really is making some ground up right now as we speak. So I know a lot of people are definitely most certainly shorts on this. So it should be, again, very interesting to see. Moving on forward, I'm just going to move on to, in fact, let's just get rid of that chart. I'm just going to move on to a WTI, but I'm just going to bring on a fresh chart just so you guys can see what's happening. Here's WTI right now, and it's coming off at 52 for everyone that attended Phoenix Blues open day last week, what they would have heard is that 52 was key for us, especially after the break of the 50. Looking to see what happens. So with WTI pretty much glued to that $50 or in and around that range for the last 3 days, let's not forget it came down to this area here, as we can see on our chart, to that $50 around that, just a break of that $50 level. Stayed below that, come down to that 49.50 and pretty much has stayed glued there, has broken long off the 49.50 and short yesterday, but as we can see today, it has literally been very reluctant to move too far either way. Let's not forget the dollar and the change in the dollar will have a bearing on this chart as well, as normal conditions apply. So a lot going on in the market. I think what we're going to do is we're just going to wrap up today just by having a quick look at the euro. Here's the euro. In fact, what I'm going to do is just flicking this over to a weekly time frame like so. As we can see, euro has broken over the last couple of weeks. This really has been something that most people have been watching intently, especially after the weeks of consolidation. Prior to that, has broken short, breaking down through that 105, 1.105 and the just below that 1.1 as well.